Hello and welcome to Revenue Unscripted, the show for B2B founders, CEOs, advisors, and leaders, where we unpack what really drives stronger revenue and margins. It's not just product, not just process, but people and behaviors. I'm your host, Jennica Dixon, president at Slattery Sales Group, and together we'll dive into how real organizations build high-performing sales cultures, avoid costly mistakes, and turn complex deals into predictable growth. Today, I'm joined by Dusty Lloyd from Promise Home Loans. This is a bit of a different one for us. Normally, we work in the B2B sector, but this was such a rich conversation around commoditization and the pressures that can come on margins, and having somebody who's got great experience in a very heavily commoditized industry is fantastic. So Dusty joins us from Promise Home Loans, where he serves as Chief Growth Officer, and he leads a high-performing team in one of the most commoditized corners of the mortgage world. With a background in software engineering and years spent building a large national team, he brings an engineer's mindset to both leadership and sales. So today we talk about how he designs teams that people don't want to leave, and how he turns mortgages into a high-trust, high-value sale instead of a race to the bottom on price. If you are leading a team in a commoditized industry and you are tired of racing to the bottom on price, this conversation is for you. Enjoy. Dusty, welcome to the show. Thank you so much for joining Revenue Unscripted today. I'm thrilled to have you here.
I'm super excited as well. I've done a couple of podcasts, but our last conversation had my mind swirling about all kinds of great things in the business world. So you're really
Yay!
great at leading the conversation and getting us into good conversation bits.
Thank you so much. I'm very excited to dive in because, as you and I were talking earlier, most of what we do at the Slattery Sales Group involves complex B2B sales, and anywhere over the life cycle of the company, from startup to really well-established companies. And so it's rare for us, and I'm so excited for this, it's rare for us to talk to somebody whose work can be, I would say, maybe more accurately classified as closer to the B2C territory. But
Yeah.
oh my goodness, the lessons in commoditization and protecting your margins and building a team that never wants to leave, like, these are incredibly valuable things. And just that overlap between your world and mine on the pressures of commoditization just spoke to me so much when we were talking earlier. So I'm so excited to have you here. Can you give listeners a quick snapshot of what you are doing today and how you got here?
Yeah. So today I'm onboarding new loan officers. We have a mortgage brokerage in Southern California, and I've got two new loan officers that are coming on board. So, one in Texas who is just great at going out and meeting realtors and other people. That's more the B2B type part of our industry, and
Yeah.
finding clients through those realtors, financial planners. And then I've got a long-standing loan officer that I worked with for years that's just great at going out and building relationships with realtors. And so we're going to show her how to use our systems and make it easier to sell. But uh, on kind of the topic of what we were going through is the mortgage business is super commoditized. You think back to Countrywide 40 years ago, said, let's take these salespeople out of the mix and let you go in and talk to a processor and figure out what you want to do and get a loan going. And for the last 40 years, they've tried to figure out how to get the loan officer out of the transaction to lower costs. And, if you could just go to a kiosk at McDonald's and order a mortgage, that would be the dream
Right.
of every mortgage company owner. But
Yes.
when you're buying the most expensive thing that you'll ever buy, and the mortgage business is super complicated, going to a kiosk and pressing a couple of buttons is different than ordering a cheeseburger and wanting no pickles. Like, it's a complicated process. And with my engineering mind, what I've tried to do is find the most difficult transactions that can't be commoditized: a construction loan, a renovation loan, people going through death, divorce, those kinds of things. Like, you can't get rid of the human element from that.
Oh
And
my goodness. I got to tell you, I've grown up in the sales industry. My dad started the Slattery Sales Group when I was 2. And every few years, some new technology comes along. I mean, I'm old enough where I remember, like, the auto dialing and the website and the, like, one thing after another. And everybody always was like, oh, this is it. This is the death of the salesman that we've been waiting for so long. And they still hope for that. Now we've got AI agents, and they're hoping that will be the death of the salesman. And
yeah.
it's like one thing after another. It's like, No, we still need humans. They're what we do with them might be different, but we will always need the humans
And
somehow.
in a kind of parallel space to us as financial advisors, and E Trade came along in late '90s, early 2000s, and that was the
Right.
death of the financial advisor.
Right.
And it's not that way anymore. And margins have grown because people need somebody to walk them through being their wealth advisor and also their debt advisor. And I was on a call with, I think there were like 400 or 500 salespeople, and the coach was asking, like, why don't people have a good thought about mortgage salespeople?
Right.
And all these people talked about how they're used car salesmen and blah, blah, blah. And I was like, we're a trusted advisor. And if you believe
Yes.
that, clients will respect that. And if you treat yourself as a salesperson that is selling used cars or selling new cars, which is even worse, you're selling on price, um, then you just shot yourself in the foot, and you've turned the industry into something that doesn't need you.
That is so true. And you brought up a really good point that perhaps the reps aren't thinking about when they're hitting the marketplace, which is this is the biggest purchase most of the people you're talking to will make. This is the biggest thing they're going to buy. It's going to affect a lot of their lives. When my dad and I are looking at our clients in the marketplace and we're helping to advise them on their revenue strategy and they're trying to craft a sales team, one of the things that we will talk about is what does it look like for your prospective clients to adopt what you're doing? Because their pain of change will determine what kind of salesperson you need to put on that team. Because if it's a really easy, quick in, quick out, transactional type of sale, that's a very different salesperson than somebody who's dealing with prospects who have to overcome a great amount of change and the pain associated with it. That's a very different sale. You're asking people to change their behavior. And if it's a really painful change, my dad calls it a forklift upgrade because that's a big deal. If you have to upgrade your forklift, that's a really big deal. Anything that's capital heavy, if it's going to take a long time, if it's a complicated decision making process, that that's now a complex, higher value sale, and you cannot approach it with a transactional mindset. To your point, this is not pushing buttons at McDonald's ordering something. And I think sometimes there's a disconnect when the leaders are thinking that what they have is really simple, easy to adopt. I mean, it's our value prop is so strong, only an idiot wouldn't buy it, right? And then they find that their sales teams are hitting friction in the marketplace. Yes, because there's commodity pressure where, yeah, it is kind of seen as a commodity, and yet it's actually a really big purchase. It's a big change, even if the dollar amount isn't as big as, $20 million, 200 million, or whatever you might consider big. It's big for them because of the
Well,
pain of
and
change.
that goes through my mind. My friend does credit card processing,
Hmm,
and a big account is a grocery store or a Walmart. And you think if you were a grocery store or Walmart owner, going into every grocery store and changing out those panels and
right.
having the software change and all that stuff, like that is a monumental ask. And are you going to do that
Yes.
over 25 cents transaction? Will enough transactions
Right.
make it so you're making an extra $100,000 a month? Those are the
Right.
kinds of things you really have to quantify and explain what your value proposition is over just cost, because
Yes.
that's a 10-year sale. And
Yes.
uh, between me doing a mortgage that takes 30 days and something that's so embedded in forklift change like that, those are big things.
They really are. And even when it looks interchangeable, because a commodity is a completely interchangeable thing, and a lot of people might look at what you do or what some of my clients do and say, that's a completely interchangeable commodity. I'll just go with the lowest price. That's what every
Yeah.
purchasing agent's job is. But it's not, because that total cost includes going through the pain of change. And in your case, that total cost, what are you paying for when you buy somebody's services? It affects massive parts of their life. I mean, that's a huge difference between the lowest
Well,
price provider. Yeah,
here's a
good.
good file that I went through last month. I had a client. He was the head of uh, development for NVIDIA's AI driving car software.
Okay.
And he had a huge amount of stock options. NVIDIA is the um,
Wow.
uh, huge amount. And so he was a Chase client and they wanted him to move all of his stock over to Chase. And for that, they would undercut me a little bit on price. And I said, well, do you want Chase to dictate where your investments are? I don't care. And I was giving him a better deal before Chase asked him to move all of his stock over. And
Right.
that was a huge speed bump. And Chase lost a sale because of that. And the friction of making that kind of move for the client was a big deal. And
Yes.
so it's a lot of getting squishy with people on those kinds of things. I deal with people going through divorce, and I've got a client right now that he went to a bank, and the bank said, "We're just not going to be able to help you. Like this is complicated." And I'm like, "Well, why would you say that to a client? There's always a solution." So I helped him craft a good solution, and he's not going to be a bank client. And I know the bank will be cheaper, but at what cost?
Exactly. Oh my goodness. I was just having this conversation with somebody else on price versus cost. And there's a phrase that we use at Slattery called TCOOL, which is the acronym total cost of ownership over the life of
Mhm.
whatever it is you're selling. And it's easy to get caught in a conversation around upfront price only, that transactional price, upfront price, that's the number on the price tag. But what is the total cost over the life? How much does it cost to actually own what you're buying? And the purchasing agents down in, logistics or procurement that my clients often find themselves stuck with, they don't have a spot on their spreadsheet for that. They only compare price. And it's a matter of expanding that conversation to include that. But to your point a moment ago, the seller really has to believe it first. And I remember you were telling me a story when we were talking earlier about you were coaching one of your reps because I think she wanted to charge a very low amount on a construction loan that
Yeah.
was upwards of $1 million. And she was looking at what I think a four-figure charge on it
Well,
or something small.
yeah, we generally charge on a construction loan 2.5%. So that
Okay.
would be $25,000 on $1 million loan. And she is used to being a commodity refinance online specialist, and she was going to charge them $4,000.
Whew.
Uh, and I was like, "You're tying. This is going to be a painful process. Like they deserve your time, and your time is going to cost money. It's not like you're going to spend 15 minutes collecting some stuff, put it in the system, and then hope all goes well in processing. Like you're going to live with these people for the next uh, 6 months. And then as the loan goes through and they construct the house, they're going to call you again. And that's going to take you away from other clients and other stuff." And she's like, "Oh, I guess I should charge more." And I was like, "Yeah, you have to." And not just because you need to charge the client more, but because you're going to be involved. And if you're going to be involved, you need to be paid for that.
Right. Well, and there's the value. And it's no longer just a transactional sale. It really is a more complex, higher value sale. And that's where good margin growth is. How do you, as you're leading, because I mean, you guys are growing. If I recall, you started at one size and then you got to another size and you're on track for yet another size. Can you talk for a moment about your growth? Because I remember I don't have those numbers in front of me. I don't remember what they are.
Well, I'll give you my path. I worked for a big national lender, New American Funding,
Yeah.
that is all across the country, and I helped them build and grow from a mom and pop shop in Irvine to now they're poised to be top 10 in the country in the next little while. But as they grew, I kind of no longer felt that I was part of the organization, and their growth plan and my clients and their needs kind of diverged. And so I came to Promise Home Loans. They're about 3 years old. We're a brokerage in Southern California. And I think we have about 40 employees, but the goal is to get to 100 by the end of the year, which is a pretty lofty goal. We're going to have salespeople coming on in groups in order to help them train and get up and running. The value proposition really is that we're a low margin company, whereas a lot of these mortgage banks are trying to charge a whole lot of money so the owner can have a jet. We're much more reasonable for the salespeople. And the software on the broker side is light years ahead of what I left in the retail side. And it comes down to a lot of different factors, but it makes it a better experience for the salesperson, and also
Right.
for the employee, or for the end customer who's getting a mortgage, because the process is just easier and cheaper. And uh, it's a commodity kind of product. So there's all kinds of people trying to give us capacity to go sell, to give liquidity in the market. And these big bloated sales organizations are just hard to come up with the money for the jet for the owner and all that overhead that is expensive.
That is, when you're in a heavily commoditized industry, man, sometimes you're just eking out a tiny, tiny thin edge of competitive advantage, but it's there. And I love, eh, so at Slattery, when we're working with our clients on competitive strategy, one of the things that we talk about is your differentiating value, that which sets you apart in the marketplace and has value for your clients can really come in one of two flavors. It can either be something that is truly unique, like patented technology, but very few companies have that. The second flavor is where you offer something that somebody else offers, but there's something in the way you do what you do, the way you execute what you do, that sets you apart from your competitors. So those are kind of the two different strains, or the two different flavors of differentiation, the way we see it at Slattery. And often when we start working with a company, we'll start talking to the founder or the CEO, and they are insistent that they have the first flavor. What we do is absolutely truly unique. And they start
Yeah.
rattling off, great service, wonderful people, high quality. And we're like, ah. Those your competitors are saying exactly the same thing. And when we
Yeah.
finish our exercise, because we walk them through an exercise on really how to get to what are you actually bringing to the marketplace, they find that it's in that second flavor where, yes, they offer the same thing as their competitors to a certain extent, but it's in how they do what they do where their differentiation really lies. And if they can strip everything else out, like you don't need to hit the marketplace talking about mortgages. You hit the marketplace talking about how you do them differently, better, whatever. And I mean, you've been doing this long enough. I don't need to say that you tell people about it, because of course telling isn't selling, and I know those are two different
Yeah.
things. But when you hit the marketplace, you're really focused on that edge where your execution is different, because that's where the best and longest lasting differentiation tends to be in our experience. And what you just described is when a company loses their sight of what can differentiate them, but they're still trying to get the high value margins, but it's just not there. They
Yeah.
feel the pinch first. And that's a really tricky spot to be, especially if you're trying to pay for that jet. Those are expensive.
And we all want a jet, but uh, two
Yeah.
things. The mortgage business, we went from $4 trillion worth of mortgages in 2021 to 2024. I think we did 1.5 trillion. So that's like a 60% drop in business. So
Wow.
there's so much pressure on price from that end. And our two biggest competitors in Southern California are call centers in Detroit. Companies like Rocket Mortgage that spend a ton on advertising to pull people in.
Right.
And you might get somebody who was a bartender 6 months ago helping you through this difficult transaction,
Right.
or a bank, and they may have the best price because they want to pull your deposits in and lend your money back out to you and make that spread. And they can be more competitive on price sometimes. But I always tell clients, like, can you call the cell phone of that person in Detroit on Sunday afternoon when things go wrong? Can your realtor drive to Detroit and go to their desk and ask what's going on? Or are they going to get the runaround? And that's tough. And I'm here local in the market, and that's a differentiator. And then you
Yeah.
have the banks, which, they have that same problem advertising and connecting with people on the weekends and all that kind of stuff.
Yeah.
And, you have companies like Wells Fargo, which used to be the number one mortgage company in the country. that had a few little hiccups with their Salesforce doing some shenanigans, and
Right.
their mortgage division I think is like 10% of what it used to be.
Right.
Um, and there's a lot of people that are selling on price and don't really know what they're doing and new in the business and all those kinds of things. And you just can't do that when it's that complicated.
Right. Well, I remember you telling me about one of your clients. I think he's 91 years old and he's a
Yep.
veteran. And so
Yep.
you have helped him with multiple VA loans. And
Yep.
now he's at the point where you've helped him with a reverse mortgage and helping his grandkids buy homes. I mean, there is value in doing what you do excellently and really kind of finding that edge of competitive differentiation, and it just kind of keeps feeding. When you're living there, that just keeps on feeding the
Yeah, and I'll
business.
tell you that story. So we
Yeah.
just closed
Yeah.
that reverse mortgage on the it was the 30th,
Oh,
last loan of the year. But
yay.
when he was about 15 years ago, we did a VA loan to get him some cash to pay off all his bills. We got him a VA rate reduction when times were really good. That's where we just
Wow.
lower the rate and we don't have to check his income or assets. And then over the last 5 years or so, he calls me every year asking, is it time for a reverse? And it hasn't been. And so he took a big second mortgage, and between the first mortgage and second mortgage, all their debts, they're barely making ends meet. He's 91, his wife's 86, and
Wow.
he knows eventually something's going to happen to his health. And
Right.
his wife will get 55% of his VA pension when he passes away. And because we got him into a reverse mortgage, there'll never be a mortgage payment ever again. And so as long as she can pay her 2,000 a year for taxes and 2,000 a year for insurance, she'll be fine for the rest of her life. And that was really his motivator. And to go through that conversation with somebody who doesn't know him would have been daunting. And he was just happy that he didn't have to explain his life over again. Um,
Every time he calls.
he was happy that his son, I helped him get a second mortgage about a month ago, and that we took good care of him for the fourth or fifth time that we've done a loan for his son. And I've done loans for all of his kids.
Wow. That is fantastic. And it's proof of where that value really is. And I'm thinking of the financial advising example you gave earlier. E-Trade didn't kill it for sure.
Mm-mm. No. And if you're going to put $500,000 with brokerage, do you want to do it yourself? Um, Do
Right.
you want to self-service your future, or do you want somebody who is incentivized to help you? And that's a tough one. Like I just left my big company. I have a 401k that's in an IRA at Fidelity.
Yeah.
And do you ask ChatGPT to invest? Do you have somebody be your financial advisor at Fidelity? Do you wing it and use friends? That's a toughie.
Yes, it is. Yes, it is. But I'm thinking that there's a lesson here for our listeners who may find themselves in a heavily commoditized marketplace to pick those complex, high stakes use cases and become the trusted guide. May not
And
be the
also, like, I'm a
Mhm.
software engineer and I'm kind of a nerd, and I talk to a lot of
Yeah.
clients that are engineers. So when I talk to realtors and I'm saying, trust your client with me, uh, I'm going to be able to talk through the difficult things. And so if you're selling B2B software or something along those lines, like figure out what your value proposition. I always ask realtors, like, what did you do before this? And I have a female realtor out in the Inland Empire, and she was a truck driver. And so she's just used
Really?
to working with blue collar people and
Wow.
really down to earth. And I'm like, between you and I, we'll have a lot of ability to build rapport with different kinds of people and ping pong back
Yeah.
and forth who's going to be taking the baton and running with it. And so, you know, that mentality will be a little bit different, but go into
Yeah.
whatever you're selling with whatever your strengths are. Like if you're really good at English literature, talk to people about interesting things. It's something that
Right.
I wouldn't be able to chat with people about. If you're good at partying, like invite people to come hang out at your house for the Super Bowl and
Right.
have a good adventure with it and build those friendships. I'm not that guy.
Right.
And
I love
even if you're
that.
in a commoditized industry where the relationship doesn't seem necessary, those relationships lead to more sales. They lead to friendships. They lead to other industries. If you're in the birth of your business, it may not be where you end up at the tail end of your business.
Right. Oh my goodness. And what you're talking about is fantastic advice, especially for younger founders. I don't mean to lean into stereotypes here, but there is a stereotype that the younger generations don't want to pick up the phone. They don't necessarily want to call. And that's not always true. I know young people who are very good at picking up
Yeah.
the phone. But that kind of connection, that human relationship, I think is sometimes discounted. I maybe it doesn't come up a lot in business school case studies. I don't know, but that human element of in my experience, and I say this as an off the charts extrovert, and I hate saying this, your greatest asset is your Rolodex, your network, your people.
Yeah.
Like, who do you know and who knows you? And you said something that was fabulous on one of our earlier calls, which was cold calling is punishment for not asking for referrals. And I love that. But to your point, I mean, those relationships are where your next business will come from.
Yeah.
And you can only build those authentically, but you do have to build them. You can't just trust, my AI bot will take care of that for me. That's
Yeah, that was Southwest Consulting, and I did that for a year and a half. I did coaching with them, and that's the thing that rings truest is call everybody you know, let them know what you do, and
yeah.
you may not know that your Uncle Fred knows the head of procurement at Raytheon or something that
Right.
could be
That's
a big
true.
springboard for you, or the guy that you were roommates with in college is working at a place that wants what you have or knows the people that you need to know or was in medical for a while and so knows a lot of doctors and might be able to springboard your sales. That's a lot easier than going out to conferences and trying to pretend like you know what you're talking about and
Yes.
uh, build new relationships.
Oh my goodness. I love that. Even in the 21st century, that competitive edge keeps coming back down to humans. I love this. I love
Yeah,
this. Speaking of humans, I would love to ask you about building a team that people don't want to leave because I know that retention is a really big deal for you. And you've talked about having a really lean sales organization. Can you talk a little bit about attracting and retaining talent? And how do you make a team that's so sticky?
that's a great question. So, I got out of kind of a corporate role and have been in purely in sales management and doing my own sales since end of 2015. And I have the loan officer I'm training. She worked with me all that time at the previous company, and she's coming to work with me now. And I've got two or three other people that are in that same boat. So over 10 years together, and yeah, it's answering your phone, knowing your craft, um, not blowing smoke up people's asses,
Yeah.
which is what a lot of sales management does is try and tell you to look at the cute little bird in my hand as opposed to the
Right.
issue at hand. And
Mhm.
being there for people and walking them through because you know how to do the deal. And, I used to tell the leadership of my old company, like, everybody should have to do a mortgage. Everybody should have to talk to a customer. Everybody
Wow.
should have to take a phone call on Sunday afternoon from a really angry client. Um, if you're not doing that, how are you going to help people get through those challenges? And
Wow.
so I'm a big salesperson as well as helping other people. So when somebody calls me and says, I've got this issue, I don't have to say, oh, call Pam in processing or call our senior appraiser about this minute thing that everybody should know. We'll take care of it. Just put your trust in me and we've got you.
Right. I love that. And boy, there's a lot of wisdom there. The what I'm wondering about is running a lean organization because I know you mentioned earlier that there are other organizations in your marketplace that also have to contend with other expenses like massive marketing campaigns, advertising. Those things are not cheap. But you run a leaner model at your organization.
Yeah.
What does that mean for the salespeople on your team?
Well, it kind of goes into the minutia of the mortgage business. So when you work for a big retail lender, your internal staff is in charge of everything. When you work for a mortgage brokerage, you actually send the loan to a lender. There's staff over at those organizations that can help our staff place the loans there and get through their systems and all that stuff. So we get a lot of extra help from those sales organizations that we work with, and where it's something that I should know how to do over at their system, I'm there for them. And I make enough money doing loans to be able to help on the sales side without making jet money, you know. Um, and it
Mhm.
makes it so I know how to do all the things that that they would need to do. I can walk them through it. So click up here on the left side when you go into this site, blah, blah, blah. Those
Right.
things. And so instead of having somebody in Chicago that knows how to do those things and you get pushed off to that, I can help them through, or their rep can help them if it's something that's specific and needs that internal stuff over at the lender that we're sending the loan to.
I love that. And what about compensation? Of course, you don't need to go into too much detail, but I'm thinking more of the philosophy behind compensation because what I'm hearing is, and you can tell me if I'm right or wrong, it sounds like the salesperson might get to keep more of the compensation under that
Yeah.
kind of lean model, which
Yeah.
I would imagine increases the attraction.
Well, it's all about motivation. And the way I talk about it is in the mortgage business, you're either pushing your loans into the system or they're pulling in. And the more money you make, the more incentivized you are to go find them. And there was a paradigm shift about 5 or 6 years ago where this big lender, United Wholesale Mortgage in Detroit, created a pull system. Like loans just shoot through their system super fast. And so that incentivizes people to go out and sell more when it's easy. And they're one of our biggest partners. They fly us out to Detroit once a year, and Detroit in October is awesome, but it's not the first place that everybody wants to go. But they've created the number one mortgage company in the whole country,
Wow.
uh, and they don't actually have a sales staff. They're completely wholesale, so they have to rely on third parties to go out and find the loans for them,
Got it.
which is a unique kind of setup, right?
Yeah.
You have no control over the salespeople other than attracting business, and
Right.
so that's made it so it's easy for us to have those loans pulled to them. And then as a company, we charge 5% of the commission and 9.95,
Okay.
and that's very lean. And the only way we get to making money as a company in uh, large numbers is through scale. And because we have these partners that are trying to scale their business, offering us value to give to the customer, that allows us to create that scale. And that's how we're going to go from 40 loan officers walking into 2026 to 100 loan officers by the end of the year.
That's ambitious growth. And I'm curious, how do you think about scaling without breaking the model, without breaking what works?
Because it's been replicated over and over again in our mortgage space. There's these big brokerages around the country that have done it, that have used United Wholesale Mortgage's efficient process and that pull to create a bigger sales organization. And the new software that is on the broker side, a program called Arrive, makes it so what used to take me 2 or 3 hours to do in the software that we had before, a program called Encompass, I can do it in 15, 20 minutes. I can do it from my phone. It's just easy and remain secure and all that kind of stuff. But we have these partners that take it from that software, run with it. It's really a pull system as opposed to trying to push that client's load up the hill.
Right. So the technology enabled growth is a very good thing. But
And
you've
it's
it
empowering the salesperson as opposed to what everybody's thinking AI is going to do, which is replace the salesperson.
right,
And if
exactly.
you are doing commodity mortgages, if you're trying to sell somebody the cheapest rate, there's a race to the bottom for that kind of client.
Yes.
Um, and that's not a race I want to win. Uh,
Right.
I mean,
Right.
I had that NVIDIA client. being very well priced was an important thing to him.
Yeah.
But it was more than that. It had to do with the relationship. It had to do with the banking. It had to do all that stuff. But it's just not a race you can win if you're going to be the cheapest.
No, it's funny. Sometimes in the heavily commoditized industries that we work in, we'll begin working with the sales team and sometimes even the sales leadership. And, we'll always begin typically with like the CEO and the executive. So we've got a pretty good idea of what their real competitive value is. But then when we work with the sales team, and again, sometimes even the sales leadership, we start working through that competitive strategy exercise where we're like, okay, what actually differentiates you? They conclude, well, we are a commodity. And that's their view of it. And we have to break the news to them. Okay, so Econ 101 in a commoditized industry, in a commoditized corner of the marketplace, the producer with pricing power wins, which means the best thing you can do is fire your sales team because that's the biggest expense. Fire the sales team. So the fact that you have a sales team tells me you're not a commodity. And therefore, what are you really selling? And that's when
Yeah.
the discussion gets rich. And I love the examples that you're using because a mortgage sounds like a mortgage sounds like a mortgage to somebody like me. But what you're describing is very different experiences. And I think that's true for any commoditized industry. I mean, from manufacturing to insurance to even software, like there is an edge. If you don't have an edge, fire your sales team. You can advertise more efficiently. But
I like that.
if you do have humans, there's a reason, and it is to
Yeah.
sell on that value edge. And I love that. So I'm curious, if you could tell leaders, if you could tell a leader of an organization, it doesn't have to necessarily be in your corner of the marketplace.
Yeah.
What would you recommend? What, let's say there's one change that they can make in their comp plan to encourage people to stay and grow the company. What is one change that you would recommend a leader makes to their comp plan to help people want to stay and grow?
That's a good question. I just left a sales organization of 14 years that I helped build and grow. And when I left, it felt like I got a little shove out the door.
Whew.
Um, um, and what I had been telling them for a long time was there needs to be some sort of retention strategy for people who help you get there. You don't get there alone. As a sales organization, there's always somebody putting in the work. Incentivize them either in the percentage of ownership or percentage of profit or some sort of long-term thing. I said that we should, because we had mortgage servicing, that if you have a big book of loans that you help create for the company that generates cash flow, give a little bit of that cash flow even if it's a nominal amount, it makes it so people understand that they're valued. Um,
Right.
and if you're making jet money, think about what it was like when you were making ramen noodle money at a company, and what would make you stay on a Friday night till 8 o'clock at night to solve a problem that most people would just have left a few hours ago and said it's somebody else's problem. Because if it's somebody else's problem and nobody wants to solve it, you have a pretty lackluster organization.
Wow, that's a very good way to put it. What does it take to encourage people to solve the problem at 8 o'clock on a Friday night? That's brilliant. It's funny. I was talking to an individual contributor recently who made a very good point because we were talking about compensation, and we have some individual clients who are paying their own way to be with us. That their company is not our client; they are, and so they just take
Mhm.
us with them wherever they go. And we were talking about compensation, and he brought up a very good point, which is when a salesperson is making a lot of money, and this is for all the leaders out there. It's amazing how fast the suits, for lack of a better word, the suits can quickly determine, oh dear, the salesperson or the sales team is making too much money. And we see it happen again and again where they give really aggressive comp plan uh, offers to salespeople to get them to grow the business. And then once it's grown, they look at this and say, oh dear, they're making this percentage or they're looking at the total amount. I can't believe this person's making so much. And then they have to change the comp plan, forgetting that, the number of zeros that have been added to the bank account because of those selling efforts, which very few people are willing to do. And the individual contributor that I was talking to, he made a very good point, which is they are looking at that number once. The salesperson is getting paid once. The founder or whoever's looking to sell the business in 3 to 5 years is going to get a multiple of that. So, yes, the sales team might be making a lot right now, but it's a one time thing. And because of that growth, you will get a multiple. So, it's okay. Like you're comparing apples and oranges here. It's okay if they're
Yeah.
making a lot of money right now because that's your multiple later, but they only get it once. And I like what you were talking about. And we do have some clients who have moved to some kind of profit sharing structure um, to account for that growth. They want people incentivized to grow and stay and keep things growing.
Yeah, my last organization, they had a sales leader in the Midwest who was flying around the country on jets and had a box at the local stadium for concerts and sporting events. And the
Yes.
owner was resentful of that and fired him. Uh,
Wow.
and I think to myself, I want everybody to be making more money than they can fathom, because it means as a leader, I should be making more money as a result. And if I'm a founder or an owner, you make that residual income that the salesperson doesn't, or even the lion's share of it. You should be thinking everybody below you should be really excited every time they get their paycheck. And if it's too much, uh, really think if it's your problem or their problem, if they need to give up some compensation, or uh, you're just being a dick.
Right. Well, and sometimes too, some of our clients are in very long cycle sales industries where it isn't transactional. It is 12 to 18 months. I mean, healthcare alone is definitely in 18 to
Setting
24
up a
months.
system is like childbirth. Yeah.
Yeah, exactly. And when people come in, they're like, all right, in 90 days, we're going to change the comp structure. It's like, you just change, people have things that have been in process for 16 months and you just pulled the rug out from under them. And it just, an awareness of your industry, again, the competitive strategy piece. What are you really bringing to the marketplace? How do you sell it? Because all of those are part of it. This isn't McDonald's. We're not going up to a board and pushing buttons.
Yeah.
It's more complex, and having an understanding of that would be a good thing. I'm curious as I do need to land the plane and I need to honor your time here.
Yeah.
So I'm curious, what is one change that a listener might be able to make this quarter to move from feeling like a commodity to shifting into trusted advisor status in whatever industry they might be in?
Um, I would say just to really hone your pitch. My old sales leader used to say that amateurs practice until they can make the shot. A professional will practice until they can't miss the shot. And so if you aren't thinking about how you're going to handle an objection, or how you're going to talk through something, or constantly be researching what's going on in the market, uh, you're going to be behind the times. So if you got to be thinking about all those things and how you're going to handle challenges along the sales process. So that would be my one piece. And the other piece is just know your worth. Like if you're really good at hanging out with people and building relationships, go do that in context of your business. If you're
Right.
really good at being a nerd and geeking out on things, do that and let people know what that's about. I've started doing some videos on Instagram and LinkedIn and all that stuff, because I'll have a great sale and I want other people to know about it. Just don't keep yourself a secret if meeting more people is your sales problem.
I love that. That is very good advice. And I love the overlap with competitive strategy.
Yeah.
That's where that's where I like to nerd out.
Yeah.
It's fantastic.
Yeah.
Thank you so much, Dusty. Where can people find you if they want to find you online? LinkedIn? Is that where
So
can
you
they
can
find?
find me on LinkedIn, Facebook, Instagram, TikTok. You can also reach me at Lloyd at Promise Loans, Home Loans, and I'll email you all that contact info that maybe you
Awesome.
can put on the screen. And then,
Definitely.
uh, yeah, if you know anybody looking for a home loan or great place to do home loans, give them my info.
I love it, especially if it's complicated, which from what I'm hearing is perhaps more common than we might think.
Yeah, yeah,
It's all complicated. Well,
yeah.
thank you so much. I love diving into things that look like commodities that aren't, and this has been awesome. So, Dusty, thank you so much for your time. And listeners, thank you so much for spending your time with us here. And we'll be back next time. Thanks.
Thanks, Jenica.